Where do you go when the bond signal turns red?
Where do you go when the bond signal turns red? Okay, so let me pull up that chart actually. Let's get back to that real quick. I think it's interesting. So here's the total bond market. You can see it's not doing terrible.
Yeah.
Yeah. But you can see why it turned red for us, that little tail there here that's happened recently. And it's actually even broken through a little resistance point there where it kind of, was at a low and then came back up and it broke that. And so when you get into kind of red signals, for us, the way we handle red signals is we get quite defensive. And again, in our fast signal, that'll turn red, and get back to green pretty quick, potentially. But we don't have to worry about, we don't have a trading cost, a commission to buy and sell an ETF. So, and in our fast signals, we use it for accounts that don't have taxes either, like IRAs, Roth IRAs, 401ks, those type of things. And so we will move to T-bills, right? And that's our default position for a red signal, even for the stock market. And we will move, in the case of bonds, we will also go to an inverse position, which is basically buying something that goes the opposite direction of the bond market. Different segments. The 7 to 10 year treasury, the 20 plus year treasury, the high yield bonds are three that we use as a short position where when the market goes down, we make money on those positions. So the slower signals are made for our, taxable accounts.
Yeah.
Don't happen as often. That just changed yesterday. And so that's what we do. And so we get defensive, we wait it out, and again, unfortunately, the bond market is the side of the equation that is supposed to be the safe haven. Right?
Yeah.
That hasn't been true this year. A lot of these are down a little bit for year to date, the pieces that we look at versus the stock market, which is definitely up year to date. So that's our outlook on it and how we kind of make our changes as far as that goes.